Good afternoon, guys. What's going on? Welcome back. Welcome back. Up. Kick-ass day so far. Pretty fun day. We got the melt. Continued through the all-time. Melting through. Tech stayed completely flat, but it's still uptrending. So percent on the day so far. Nothing is taking off. I mean, there's everything's just continuing into tomorrow. Uh, are we gonna get a take profit day tomorrow? I don't think we even need to answer that question yet. We'll just see tomorrow because there's no reason to take anything off so far. Uh, So yeah, looks pretty damn good. Those bets that we placed earlier were pretty good. Bets from yesterday were pretty damn good. We got Blinks 13%, GRWG's 13%. BSIG continued from the open, so we had this gap up that I talked about right on the trend line, and it continued, which was nice. So you got to be able to continue that. Uh, we had things like Z. Z was a great opportunity, I think, to take, and we talked a little bit about the sneaky move here. Difficult, difficult to get, but that's where you just got to make a confident trade there and go for it and take it. Now COVID winners continued. These are not taking off either, which is a good sign. These are not, again, this is sort of our second tier of trades coming in after the other growth trades. We could have made them down here, but they were not safe to make down here. They weren't the same sort of risk, and so now we took this trade. Peloton looking very good, right? Talked about apps a little bit. This pulled back, so there's a couple ways you can treat these sort of trades. Again, this is the next tier of trades as well. We have these trades that were at their highs and then started to consolidate and have not. They've taken off at the same time, but they're much higher up in price than growth itself, which came from a lower point. Yes, they're sort of close in the high and everything, but again, there's a clear difference between these tickers that were already at highs and then growth that was already at a low coming from a high. There's plenty of software companies that over the last week have continued to do done very well. Most of the charts that I post in the last week or two have been on the growth side, and mostly software companies. Things like Upwork today stand out. Communications had a big day today. Verizon, T were down, and then we had things like we had the quite interesting windbreaker ORBC up 52%. Yeah, that type of stuff happens. Other trades, again, on the software side continue to do well. Semiconductors performed well. Some gap ups, such as UMC. We had other tickers like NVIDIA that are looking strong. They're finishing a little slower here. They're still up 1%, though. There's no reason to look at these as you can look at them and think, okay, there's a little bit of exhaustion here, and this could be a bit of a bearish candle, something. But we're gonna let these sort of slide, and we'll see, and we'll get some confirmation. It's not like I'm gonna take profit here going into tomorrow on Friday. I'll take it tomorrow at open if it needs be, and then I'll take trades that will follow this. So, for instance, this is a great gain so far. A lot of these semis are paying off very well. I think AMD is a good example where it's been very. It's not fast, but it's not so slow that you would ever get out of the position, right? And so there's a lot of reasons why we don't want to have to get out of this tomorrow. It may happen. It may happen. And then we're going to want to have some sort of trades because, again, it's not, they haven't really broke out. They're sort of still within this consolidation. Now they're ready to break. The move, this is not the move. This is the recovery. And then you're looking for the break to the high, such as growth is done, right? And so this is where those semis are right over here. We're really looking for that next move. And I'm I predicted it well before that we're getting the all-time high on the Nasdaq by tomorrow, and it's not many points. It's not many points. Right there, 75 basis points, less than 1%. It's going to happen tomorrow, and if we get pushed into all-time high, all of these tickers that are a little behind, they're just a bit behind, right? Things like Amazon, Apple that are right there. They're helping push this average up. These are the kind of things that are gonna they will get demand inherently, and they're going to put some fucking points on. Apple here, again, I hate that I had to take this trade, but am I going to leave this money on the table? You have to be out of your goddamn mind. As if we're not going to take the points are just there. We haven't even done a damn thing. I haven't even looked at the position. You got to take those. You have to take those trades. There's nothing you can do here. And as much as it is to be silly to be a fucking Apple trader, whatever. Social media has continued to do well. The Snap trade, the Twitter trade, the Facebook trade that led all of it. These are trades you have to be a part of. Why? We talked about all these tickers that are going from the support, from the break up to the trend line, whether it's a trend line, horizontal. We have an understanding that there's some resistance that will come and we'll take it up to that point, but it's going to fucking rocket its way there. We're getting that. They continue to be strong. There's been no take profit so far. Look at this tail end of price coming in. We're doing it. We get 3 minutes, 2 minutes and 20 seconds. Things like shop I talked about, right? Again, very hard to go take that trade now. It's very hard to go take that trade now. People are going to buy it. People are going to buy it. But you're not going to be happy buying it. Are you happy if you bought it already? Yeah, you're pretty happy. Because you have this unlimited sort of potential in very, very little risk with all the support in here. That's the kind of trade you want to be a part of, that you can stay in this trade for a while. You can stay in this trade for a while because your downside isn't going to hurt you, and you're willing to risk this because of the potential that's still there, and it may take time, right? It's not, some of these others are immediate. Like SQ is going right here. I'm fine with taking that rate to tomorrow at the trend line, taking the profit. If there's a trade that we can get on the inside of this channel, absolutely, we're going to do that. And if we can push it because of a very quick break, perfect. But these are the kind of trades that from support to the trend line, that's my 100% trade. That's my 100% trade. Going to walk away with the money and go have a great fucking weekend, right? That's how those are going to work. And so again, we have a lot of trades in that area. Today's been a very nice day for that. And this last couple of weeks with growth going, again, is really, it's giving you this idea that if you're not getting in at that low, you're getting fucked, because it's gonna suck. It's gonna suck to be buying up here. I mean, everyone can see that this gain has happened. Hindsight Capital will tell you that you should have took that. Well, yes, of course, but it's not that easy. But again, the points were there, and now the points are here again, and you got to take those trades, right? So again, tomorrow, again, if you're not in positions, you're out of your mind. You're just out of your mind. It doesn't matter if the price could come down. That's literally not the point, right? It's quite exactly the opposite. So don't do it's already up so much, I don't know if I can take a trade. Like, you take profit and then you go, well, I made my money. Ho ho ho. Did price stop because your dumb position is now over? No, it didn't, right? No. So get involved. You get 10 seconds. Place that damn trade already that you've been looking at, right? Place the trade. Travel, we're going to take a look. 3 seconds. There you go. It's over with. It's over with. You didn't. The travel trades from the low over here was nice again. I know a lot of you guys took like the CCL, for instance. These kind of trades from here, it's just nice to have that base going into tomorrow, and then we can just have it over the weekend. It's not even that this is a good trade. It's not, down here was the good trade, and then you had to get out of it. And most of them were today. I got out of the trades at the open today. But I'm happy with taking a short-term trade that I'm just going to push to Monday. That's it. We'll see what happens tomorrow. It's not that we're going to miss something or anything like that, but the points there are nice. The points there are nice. And so there's a lot of trades like that today that I think you can take those at the low and be pretty happy with the trade. Like Plink yesterday, Plug yesterday, the solar type of tickers yesterday, Clean Energy. Taking those at the low yesterday was nice. You get paid on these, right? It's a nice trade to take, even though it's preemptive. We're betting on equities to be up, and we want to take it in the place where we're going to get paid right today. We want to get paid right now, right? There's a lot of examples of these. I think the QFIN trade that I brought up this morning was very nice. It kind of snuck up as well. I mean, it's hard to look at the 5-minute here and have confidence with the idea, and that's fine. But this move coming in through here, this turned into 8% today, which, again, if you just look at this, it's all the same orders. So, I mean, it's not really a secret, but it's all the same orders every open. But for whatever reason, we have, I don't know, a mixed bag over here. But that was a nice trade. That it's not so much about the points today. The points today don't really matter. Yes, you got profit, but I mean, anything could happen by tomorrow. It's the points you're going to get there afterwards that really means something, will turn on into something possibly. That'd be an example like apps as well. If you took this trade, you're not going to take this off because of this price move. You're up 6%. If you took the trade here, or if you took the trade over here and you break even, you don't want to get out of that trade. So let's say you stuck and you got into the position here and you're at like break even or down a tiny bit here. You want to stay in that position for the overnight because of where it is, right? And we have some trades that are like that. I want to show you something like Netflix here. This is such a difficult trade, and I know you guys are talking about news or something or something here, but it doesn't really matter. It definitely is a part of price though, and there's news traders trading shit. It got rejected a bunch of times today, and it's this whole zone here. When I put two levels next to each other, it means I'm trying to illustrate a zone. Usually, again, they're all going to have wick touches. They'll both have wick touches all the way across, but it's usually indicative of a zone of price, and we've had this a lot on Netflix. Can you wait till tomorrow to take this trade? No, you can't. If you don't take the trade before here, and now this trade was completely fine to take yesterday. Completely fine to take yesterday. We talked about it a little bit yesterday about the price action, but today is a difficult day because it does a lot of different things. None of them lead to you getting boned tomorrow at open. None of them are going to be in a situation where it would hurt you for taking this trade at any time today. You're not going to get a situation where this is going to springboard down and get a rejection that's going to bring you down 2%. Now, maybe I'll be wrong, but probability wise, it's not going to happen. You don't get price action like this that leads to 2% down. Why? Because the people that are buying up here aren't going to sell it down there because it doesn't make any damn sense. And anyone that wanted to sell, guess what? They could have sold it here today because it's supplied out of its mind. This is all the supply. It couldn't get through. People are selling there. No one's going to sell it down here. It doesn't make sense, right? And so there's almost no risk involved with getting in here. And the potential here is that you're going to break this resistance, and now you have no sellers, and your price is going to be up here. That's a bet. And it doesn't even need to be tomorrow, but if it is up there tomorrow, you want to be able to push that into the next week and see what you can get there, right? And again, the difference on this chart is that the reason why it got held before was the market. Now the market has unlimited potential. It can keep going through all-time highs. There is no consolidation. There is no something stopping it. It can keep going, right? That's going to be a very nice trade, I think. That's sneaky as well because it's very hard to go. You can't take this trade over here. You can, but it's kind of just bad. It just doesn't look right. The price actually kind of sucked. There's like levels here. Sure, you could have got away with it. You could have got away with the trade and you would have made money. It would have seemed good. That's fine. And I wouldn't criticize anyone for taking the trade over here. But again, there was trades that were straightforward and others that were not. This was not a straightforward trade, right? There's trades like Chegg, Chewy, these charts I talked about that are in this sort of spot where they're not moving. This is sort of our next form of trades that we're looking for. Tomorrow, these ones will be important, I would say. Same with the Chinese tickers. Again, I would say these are, if you're not in these trades, it's fine because they're not moving, but this will be the next iteration of trades, I would say. MCH is the China ETF we can use. I posted the chart on the other layout. It's in the chat. These kind of things, we should be able to see these moving here. ICLN, again, this year, I took all these trades down at the low. This is up 1.5% today. It's not much, but the potential here, again, that this is in the wrong spot is that it's going to gap over this way and you're going to put points on, right? And that's what we're betting on, is a lot of these charts to be up going into next week, right? Tesla going to be up next week. The price is bad, right? Like the price action is not very good right here, absolutely, and it doesn't really give much confidence because it's not doing better than the average, right? But you're not betting on it right now. You're betting on it next week. You're not betting on it today. You're betting on it tomorrow, right? And so you buy it today for tomorrow, just like anything, right? So ENPH was also at the low yesterday. Plug, Blink. Some of them, again, didn't put all the move on, but they did gain at least some. They gained, Plug and ENPH both gained 2%. I'm not going to cry about 2%. That's for sure. Those type of trades, we'll see if they're able to do something tomorrow. Now, we have other things on the COVID side, like Zoom, right? The COVID winners, that the Chewy charts like this as well. These ones that I talked about, I got a part of these. I wouldn't say there's not much risk here. I wouldn't do this if you're not in other positions, right? Since I'm fully positioned, I'm okay with taking these trades, taking some chances on charts like this. I would not be buying this shit if this is your one trade you're gonna make. No, absolutely not. It's gonna take time, but I would say that these type of charts, again, this is the next iteration of trades to come through. I would be looking to preempt this. It's been trending up, but it's not making the move. I would expect these to make a move possibly over the weekend. So I put trades like this on. I talked about the Chewy chart in a very similar spot. I would say Gamma with Gamma alone coming in with April monthlies, I would say that's probably enough to get charts like this to get moving at least and get off its ass, and enough to trade it up to a high and swing it. And again, like I talked about, we operate in those swing areas, those very short term trades. You don't need this to move very much to go make a fucking 100% on it. So that's a lot. Look at this. Up to the high here is 12.5%. 12.5% would easily be 100% on a short term play. So that's, it doesn't even need, that could be over 3 days or something. It's not going to take that. It's not going to be like that, right? I think we have a pretty good understanding. So again, a lot of our charts have just continued to move. If you weren't already a part of them, you wouldn't really be able to make money on them. So again, you had to be a part of them. It's not like you could have bought Squaring today and you would have made money on it. No, you had to already be a part of it, right? And I mentioned, like, there's 4. We mentioned PayPal, right? The other providers, and again, we've been a part of these moves and we're capturing it, and now we're really getting the heat on it, right? This is where the move's really coming. We have things like ARKF, right? ARKF is the fintech ETF here. To act like this is not going to get the points, you're okay. Okay, you don't think the prices on the individual holdings will be, but to not bet that there's going to be a flow here, you're crazy. You're just crazy. And again, it's we can say the market in the price action is crazy right now, and there's ignorance, and we can say anything here that we want, right? You could say that the price action is crazy and disconnected, okay? But you know what's crazy is not being a part of it. If you think it's crazy and just keeps going up, then why don't you get a part of it then, right? That's what I would tell every single contrarian out there that wants to bet and say things about the market. Then why, if it's so much like that, then why aren't you involved? And why do you keep fucking yourself betting against it? Right? Why would you? What's the point of doing that? If the point is making money, then stop bitching and make some fucking money, right? That's the whole point. And there's plenty of chances out there. And again, we keep being a part of it, and it's the same thing every single damn day. And we do the same, we make the same trade. It may be a different name, might be a different position, but we use the same discipline every single day, and it works every single day, right? It's not different. It continues to be the same. And we go through cycles of different kind of sectors and indices that we're buying, different names, and there's different movements that we're capturing. And sometimes we capture over a week, sometimes it's 2 weeks. This move from the 25th has been quite a few days, right? The move from the 25th, that's now 9 bars, that's 2 weeks now in time. It's been 2 weeks that most of those trades you're still a part of. Now, some of the ones we're capturing now is a few days, right? 2 days, you're in and you're out, and you made 100 fucking percent on it, and you're happy. It takes a lot of those trades, absolutely, and you have to make a lot of trades because you don't really know which is which. Some of them are faster than others. Some of them are sneaky, and you can't tell. DS here, this doesn't look like very much, but again, it's these kind of moves here that this is 5.5%, but what's 5.5% on a derivative, right? Are we underlying share traders? Are we trying to get some fucking votes on the board to go change up how our company works? Are we trying to be derivative traders and make some damn money, right? We're betting on speed. We're here to bet on speed. One of the bets coming into the end of the week here was that we've had a low volume week. We've had a low volume week. How are we finishing the week right now? We're finishing the week with volume, with action, activity, right? This week has been pretty slow. Besides the start of the week on Monday, and Monday you can't, it wasn't really that much volume. It's just the way that we opened and then it was over with. We've traded flat since then. The bet was from yesterday that we're going to have volume to finish off the end of the week, and at least going into next week have more volume. It's the same as saying we're betting on volatility and we're betting on movement, right? How do you bet on those things? Well, we have this really great tool, let me tell you about it, called options. Those are derivatives of the underlying. And that's how you know what a derivative is? It's the speed at which the underlying moves. That's all a derivative is, right? It's telling you how quick something's going to move, right? That's all we're doing. We're betting on that speed to pick up. And again, it's paid off over and over, and we're going to keep doing the damn thing, right? Tomorrow, it's going to be a little, if we get the same thing, I think you're going to get anxiety in the market. If we get the same thing as today, and maybe I would say if we open higher, there's going to be anxiety. Absolutely. And there's going to be trades that you're going to want to take profit on. And I've talked about this. I'm like, I just want to set it up for tomorrow. We're going to be bid tomorrow, probably, right? If we take a look at We take a look to Hang Seng. I would say this is going to be up. Tech is going to be up in relation. Nasdaq's going to open possibly at all-time high, right? We're super bullish, and guess what? This is how many days is this? Is 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 10 green candles and minus 1 or 2 candles that were down technically on the day, but it's basically 10 green candles in a row here. There's going to be 11th green candle, most likely. It's not that we can't do that, right? We can continue to do that. We could have 30 damn fucking candles in a row and keep going to all-time high. That's a possibility. It's entirely possible that we can do that. And right now, the signal is that we're going to do that. We're going to reach all-time high tomorrow. What happens when you get all-time high? You keep pushing through all-time high. You get to all-time high, like over here, and you keep pushing through all-time high. That's what you do. That's how all-time high works. We start to come out of that when there's other things that take our demand away because there's no supply, so something else needs to be in demand, right? What the hell is going to be in demand right now? Is the dollar in demand? No one wants the dollar. No one wants the dollar. Okay, what about bonds? Well, nobody wants bonds, and we know that for a fact because yields have been rising for quite some time now. No one wants a fucking bond. What am I going to buy bonds for? My snotty-nosed cousin? I ain't buying no bonds. My nephew? Buying no bonds. What about crude right now? Is there like a reason why we want to go spend some money on some oil? Well, not right now. Probably not. There might be some bid come through here, but that would actually raise equities, right? What about Bitcoin and shit? Well, those all make our equities go up. So right now, we're still in the spot where the only thing in demand is equities, and everyone wants it. Does anyone want to buy emerging markets over the US market? All equities are risk on. If India's up, if China's up, the United States is going to be up. It's not going to take demand away. Why? Because we have just this almost unstoppable amount of flow coming in. It's not going to stop. And you have to remember that everyone's an investor, everyone's a trader. That means we have more and more demand trying to all buy the same damn thing, right? The only thing that makes that go away, the only thing that can change the supply is if there's offerings and they raise the amount of shares available. That provides liquidity. That's not going to happen every day. Happens every now and then. What's the only other way? Through the derivatives, through options, market makers can write more options. What happens when you write a bunch of calls and you produce a whole bunch of new calls? Through that act alone of trying to provide more supply for a market, it's increasing exposure and it's causing the underlying to rise in price. So even though you're actually upping the supply through a derivative, it's not on the underlying and it causes the underlying to spike in price. So you're trying to provide liquidity for all of us fucking memers out here that can't stop buying everything, but it actually causes price to keep going up. I want to remind you, we have 1 week until April monthlies again. Every time that's the case, guess what happens? We rally into that sucker, and we did it early. We started early. This move was not so much because of a gamma reason or anything like that. This was just equities being risk on. Well, guess where we are now? We're now in a position where think of everything that's now in the money that was not in the money. Now, a week from then, research tells us and the data tells us that a week from now, so when contracts expire from a week from the day that we're at, which is a week from, so tomorrow, market makers need to start hedging those positions. So tomorrow, we're going to be a week out, which is basically the peak at when everything starts for market makers to start hedging. Look at all the shit they're going to have to hedge. And look at the acceleration. If the acceleration stays at this move, this trend line here, this is well above the average. This is well above any sort of volatility that we talk about in a market. This is the average. This right here is the average. Look at the difference between these two. This is the difference between, okay, this is the average volatility, and understand sort of the variance in the market. We have an understanding of variance as well, and so that's priced in for hedging. Here is what you have to hedge this time. That's a lot more, and guess what? It hasn't really happened yet. Now, we saw it on some tickers. I pointed out today, some of the meme tickers, I would get involved with them. Things like AMC down here. AMC's at a low. This is going to need to start getting hedged. It's around that $10 part, which is an important metric. Triple BY. This move here today, it was 100% market makers. I could see it happening live. 100% market makers pushing this here, and then nothing happened. No one traded. GME, is it going to happen? It's entirely possible. The same thing. The way this trades through here is going to cause, again, the gamma to come through and equities are risk on. People are going to buy. I'm not so much a fan of the GME. I like the triple BY AMC better. And then again, our one thing that we know for sure and that we've had practice with is with retail stores. I have practice with it. We know how it works. We've already done it with WBA. We did it with Red. These here are going to get squeezes, and they're in a great spot to pick up if you're not already in this position. So today was a great time when I talked about it earlier. Taking those early at basically the low point, the cheapest you might be able to get them. Now, these can keep going down into tomorrow. That's not the point. We're talking about into next week. Into next week is when this stuff picks up, and you don't get to choose when. It's when this acceleration picks up that the hedging has to start to pick up in the pace and the underlying goes up, right? So as the underlying starts to rise, so does the market makers, the gamma rating in terms of how quickly they need to buy the underlying to again, depending on where the contracts are, depending where all those calls are. Let's say all the calls are at 23. They don't need to start hedging those until price starts to approach 23 faster and faster going into next Friday, right? And so we're trying to position around that move. And so again, you don't want to be doing dumb things and like holding on the way down or some shit. You're gonna be buying on the way up. Just try to, again, you're just trying to capture that move in some sort of way. And I would say that we're in a very, very weird spot. Again, we're in a very weird spot where this could really get. I would say, again, I've already said equities are really risk on back when the market wasn't even going up yet. Now we're up here, and now we're in this fucking strange spot where we could be just keep pushing here. Do not let yourself, again, don't cut yourself off from the possibility of further and further. It's the most likely scenario, first of all. The most likely scenario is you continue here, okay? That doesn't mean that we're not going to be we're not going to manage our risk. So tomorrow, if we gap up, understand there's going to be anxiety. And there's going to be a translation of that to the derivative because movement is going to stop going into the weekend. It will stop. So that means you have an opportunity to take profit and now put on a new trade betting on the next week. So if you need to capture this gain here, I would do it. If you have something that expires soon, I would do it and then take a new position and bet on the next move. It's okay to split them into two, and you've already put new trades on the last day or two anyway, so what's the difference anyway? I would be looking for some of those to think about how people think and realize that it's not so much the market, it's behavior and how people are going to react. I would just say you get something that gaps up tomorrow, take the fucking money. Take it and then put a new trade on. Put whatever your cost basis back in and take a new trade, but take the money home. I would do it. I bet on the market going up. I 100% bet on the market going up further, but there's no reason not to take the money home because again, there's going to be some anxiety that it comes, and there's going to be a pullback. Market always pulls back, but I expect the next pullback to launch us further to the upside. Healthy price action, right? Let me see what Mopsy said, and I'm going to take a look at profit section. Is there any rhyme or reason on when market makers hedge their calls? Remember during the GME fiasco, there's a large part due to MMs hedging their positions right when they sold the contract. So when they need to hedge, okay, right? Let's talk about. Let me just put this. Okay, triple BY. I talked about this going to happen. Okay, the contracts. Gamma is its highest at the money. So the at the money contracts have the highest amount of gamma, right? But the delta is 0.5. So the delta is only 50 deltas. That translates into a certain amount of shares. And so for every contract, so for every options position, there's an equal shares position that goes against that position to cover it, right? So let's say you buy 30s here. The equal position here might be 500 shares of the underlying. I'm not going to do the math, but this is how the math works. The delta is really just called, the delta is just the hedge ratio. So if it's 1, it's 100, then it's 100, okay? And so whatever the number leads into for exposure, at any given point is how much you would have to hedge. Now that number changes every single moment. So the amount that the market makers have to hedge against a position changes for every moment. Do they need to be hedged against 34 calls right now? Well, 34 calls are about 15% out of the money. They don't need to be hedged against those right now because the price hasn't even moved. But if these expire next Friday, right, at 34, they're 15% of the money. Okay, so for right now, price has barely moved, right? But if this price starts to creep up this way, this now takes into a consideration sort of a pacing idea. This is where the derivative comes in of how quickly something moves. As this starts to pick up and start to move to this point, there's a point at which the math says that there's a possibility that this is going to happen, right? The probability starts to pick up. So it goes from 0 to, let's say, 30% probability. Well, now they need to put on, so when you look at the options, there's a probability, right? Let's say it goes from 0% to 30%. If it's 30% probability something's going to happen, then that means they need to put 30% of that delta hedge on. And so they're going to put 30%, they're going to buy up the underlying to 30% of the delta of that contract. Let's say this is where the delta hedge ratio, the delta ratio is also the probability. And so if it's, let's say it goes from 0 to a delta of 0.3, which is 30 deltas, then that means there's a 30% chance, and which means they need to put 30% of the hedge they would have at a full gamma peak on at this moment. And now as it changes, as those contracts become closer and closer, this ratio also goes up because it's fucking pinging around a lot quicker, right? Because the time ratio also is at its peak at its close as it gets close to the expiration. So as it gets close to expiration, time value goes up in exponential, which also causes this idea of how quickly you need to put these on, makes it quicker and quicker. These that expired over here, they don't even need to think about hedging when they're over here. They don't give a shit. It's when it gets basically within the last week, things pick up because it's at its peak. And so as it starts to approach that strike price where it will have intrinsic value that they would actually need to pay out that, or at least be able to cover if someone executed those shares, which again, basically no one does, but there's the option to, which means they have the liability to it and they have to cover it. They're going to start to buy the underlying to hedge those. And again, it's against the delta and it's against the way that gamma picks up. So gamma might be pretty low because it's not close to at the money, but as it gets close to it, the gamma picks up to the peak, which is at the money, which means when things are at the money, they have to be fully hedged. And then from beyond there, they're obviously already hedged. So as it gets closer and closer to at the money, they buy. It picks up in that last week, we know. We know that for sure. It gets picked up. They don't have to be hedged beforehand, but they'll start to do it. And again, they understand that the liquidity, because they're the liquidity providers, the bid and the ask. And so the way in which they do this, again, is through themselves. They're literally already a part of it. And so they're changing the supply and demand, and it just causes that price to rise. In them buying at the same time that there's momentum, again, it's going to cause price to go up quicker and quicker. And at the same time, there's likely, again, this is where the meme stock part comes in, is that as price goes up quickly, everyone wants to buy calls. But if there's not enough calls for everyone to buy, then market makers need to write new ones. And so as that quantity goes up, so does the exposure. And this is where you go from you might need a certain amount of shares, like 100, let's just use small numbers. You might need 100 shares for Greg's position, but as you write my position in Billy's and Johnny's position, all those calls, then you have to start buying more shares. There's only a certain amount of shares you can have, but there's an unlimited amount of calls you can write. You can write as many calls as there needs to be bought because you provide liquidity, but there's only so many shares. And so the price gets going. And again, there's ratios in there. It's the last week. It's going to pick up. It doesn't always need to happen because, again, this is where the market being bullish is the important factor here because people are going to be buying anyway. If we were going through consolidation, it doesn't really matter, right? Because if people aren't buying, then it's not going to cause price to accelerate. Since we're at peak acceleration right now, that trend I just showed you, it puts market makers in a spot. Again, they're not trying to fuck anyone. They're literally just trying to provide us liquidity so we can keep trading this. It's going to have a very sharp ratio, and it's going to cause a lot of buying up front. But again, that buying might not finish towards the tail end of next week. It may be very upfront like it is right now. So it may be all happening right now. And we're going to want to take profit on that before it comes back down, right? It's not gonna be a violent downturn. I don't think. I see this doing, like, I want to make sure I'm clear here. This move here, I do not think is followed by a price coming down here. That's not what I foresee. I see it being a very normal sort of pullback, maybe 2 daily candles into a short consolidation or more of this shit. This very sideways trading that does no take profit. No one's taking off long positions. No one's taking off long positions. This requires long positions coming off. This here is barely any long positions coming off because selling happens this way. It doesn't happen sideways. You don't sell sideways. You sell it down. So all of these things in conjunction have, with the very strong equity market and the fact that we can find things every damn day. Again, do not be fooled by my stock picking. Everything and everything goes up right now. So again, I want to make sure we're clear that when I do this shit and I'm saying, guys, we're all just chimps. We're all fucking chimps, right? We have brains in a vat. We're meat bags. It's again, it's just the timing we're trying to get. You can pick anything and it's gonna fucking go up. We're just trying to bet on when it's gonna happen, right? And how quickly. So please, still, it's very easy to be like, wow, look at this shit. This is really great. All I'm doing is I'm literally all I do is I'm just showing you what the price is doing itself, what the market's doing, and where we're gonna trade it. We're gonna trade it right here, right? There's millions and millions of people buying Square Inc right here. How many? There was 15.5 million shares traded today. There was probably hundreds and thousands of options traded. It's again, everyone's doing it. We're doing it in our way here. This is where our alpha is. It's not the picking. It's not the, again, keep that in mind because you can buy anything. So you could literally buy anything, and what's what I said at the start of this whole thing back here on the 25th, going into the 25th, that we're going to be buying all equities, and we said fuck it. We bought all of growth. We shorted it for a while, and then we said fuck it. Again, everyone said fuck it. Everybody bought. So just, it's going to continue, but realize that if we don't have anxiety because we want to keep pushing it, it's not up to us though. It's up to the market. So we're going to react accordingly. If the price keeps going up, then we're going to ride it to the upside. If it gets crazier and crazier, we're going to let it keep getting crazy, and we're going to keep letting price go. We're not going to let our position run. We're not going to get out of it unless, again, there's reasons to, which transitioning is smart to do with options because we can put new bets on, because everyone's betting on price to go up. But if we can take profit on this and put a new bet on that it's going to happen quicker than other people think, people are not expecting this to keep going up on this trend. I promise you. If we put bets on that we bet on it to continue, that bet is bigger than this bet. It's just so much more risk involved, right? And so that's where taking profit and transitioning does become very powerful because we get to take the money home and then play the game again and start from a higher level of difficulty, right? So keep that in mind. Let me take a look at the profit section. Curious what we got in here. Monster Day, Momsky says. Push Blink, Apple, PLNT. Oh, I forgot about PLNT. That was a fun one. I can't remember why we were talking about it a couple days ago, but I bought that. I saw that. TJX, transition AMD at a local level ahead. Enter Z, Beyond. UIND was interesting as well. Yep. Money on CCL and Discovery. Hell yeah. Sounds awesome, buddy. That's awesome. Yeah, great names. Again, just keeping the eyes open, right? LSU with the 590. EV boy, getting it done. Spoon says a lot of percent. A lot of percent. That's usually my answer. That's a good one. A lot of percent. One thing I changed up the last few weeks was starting to take notes on lectures, old videos, especially on those things that apply to my thought process and tendencies. Constantly testing, iterating, preconceived assumptions, especially on down / sideways days. Let me take more confident trades. Know when to bend rules and ride the waves. Definitely. Yeah, definitely taking advantage of those days. The sideways ones are the most difficult, but I mean, they get you fucking paid. I mean, obviously just being a part of it and being confident taking trades, right now you're getting paid. So, but it's about the work, right? It's the work. That's awesome, buddy. Awesome. Brian with the 134 Apple swing again, he says. Great numbers. Awesome, guys. No, that's awesome, honestly. Kids, can I ask a question over voice? Yeah, let me put my headphones on one sec. speak away. The pit of exchange. Oh shit, you guys, you're supposed to be a voice button, right? You guys are supposed to hit a button. Let me see. Keybinds. It's toggle. Wait, does anyone know what the hotkey is? Brian does it all the time when he's in here. Control Shift M. Control Shift M. I think it unlocks it. Here, I'll just switch it in the damn thing. Oh god, now everyone, guys, you're all gonna get unmuted, so be careful. I think you guys are all unmuted. I don't think you have to push a button though. I don't know how this fucking thing works. There it goes. Yeah. Yeah, I can hear you, buddy. What's up, buddy? Hey, thanks for calling in, buddy. Definitely. Yeah, so this is where again, and I think I've been saying it a little bit more recently. And because that's why I'm trying to prepare us for the next move because it's so easy to be so excited about green and that's where we have to feel the same even when it's down, right? We operate with this method, we operate in a short-term capacity, right? And we follow some pretty basic rules and we get in and out of positions in the same way whether the market's going up like it is now or if the market was going down as before. And so there's long-term investors, right? Long-term investors don't care about short-term volatility. This during September, during the beginning of this year when we started to come down on growth, they don't give a shit. They're still in tech, right? And so they hold shares and they just keep pushing through that position. To them, they're trying to make money in the next 5-10 years, right? And so what you're explaining is our short-term trading, which is if the market's not going up, then we're feeling it in a short-term capacity because we trade the short term, right? And that's where if you're only trading the long side, which is fine, then you need to be making money when the market is going up. And that's where when those pivotal points come in, like this again, we just had another day back on the 25th that the signals come in to go buy everything. And if you do everything there, the money you're going to make capturing this move here covers those times when the market's going down, when you don't have great short opportunities, and you can't take short-term trades that are going to pay off in the same way when the market's going up. And so, again, it's because there's two different styles. We are on the risky end of things, where we trade short-term derivatives, and we trade it off at these points where things come out of a breakout. When it's consolidating, we don't touch it. Sometimes again, we look for tickers that are having their own velocity. They're outside of an average. But we're generally not trading things that are in a consolidation. That's because we're on the short end of things. We only trade the breakout. We trade the velocity, and we capture it. And what we do is in those few days that we hold a position, or the couple of weeks that we're possibly able to hold options, we're going to make a lot of percent, right? The long-term investor is going to make that percent over a longer period of time and not risk anything in the short term because they don't care what happens over a year of time. Some of them don't care what happens over 5 years. That's not how we trade, right? And so when those times come in, like this last time, what did we do? Let me bring it up on like the screen, right? Well, I already have her. What did we do when growth was coming down? We basically were only trading growth, right, in tech. What did we do when tech was coming down? Well, we couldn't trade it. And we weren't going to put ourselves in a position where the macros are not, even though we trade short term and we're just trying to take a swing trade, if the macros don't line up, the flows aren't going to line up, and we can't take those trades out of lows. We can't confidently buy on supports, right? So it's like over here on tech, when you, like you said, high volatility, we can't confidently buy over here, and we didn't buy. So what do? Well, we look for other opportunities, and that's where you can't get. This is where I know a lot of you guys get discouraged. Like you just said, Mopsky, I know Brian mentioned this. Get really discouraged because you lose confidence when the market's doing this, and you're buying and trying to force something. That's where when this is happening, I didn't buy any growth. I was shorting it. If you can't short, that's okay, but it means stay on the sideline on this. But there's always, if you keep your eyes open, there's always other opportunities. And that's where the Dow play was coming in, and we took this trade. There's almost always something you can trade. You don't want to force trades, but you have to always realize that there's always something. And if you can't always get something, you need to realize that's why we try to capture everything in that moment and make something out of it. Because it's in these moments when we take these trades and the points we're going to make on this. If you make a few 100% trades, right, more than that, and we're talking about a sizable percent, right? Then it doesn't matter if for 1 month you don't make the money, but you just need to know that that's going to happen. And so going into this next move here, right? Some of you have made a lot of money on this move. I made a lot of money on this move. I'm still not going to feel good if the market comes down here. I'm not going to be able to make money for a while, but that's a part of the market, and I don't get to dictate that. The growth over here, if this was the whole market and there was nothing to trade, well, guess what? For basically a month or two, we were just fucked, and we couldn't trade anything. And let's say it's so much volatility that you can't even trade it, and the only thing you could do is be a long-term investor, then you have to stay on the sidelines. It's not always going to be there. There's not always a trade, and that's why I get really antsy and I say we have to take this and you have to get in this trade now, because if you don't make the points now, that's how you're going to feel. You're going to feel like this. You're going to feel bad. Now, you can feel really good because if you get out of the position, and yes, I know I've done a pretty good job of that, of getting us out of positions and getting us out on dates when it doesn't really even make sense. And sometimes you get lucky, that's going to happen. But the reality is that we have to wait for price to go down to get out of a position. And so that's where right now, what are we doing? What am I saying about this position here? We're only going to get out of this position in the same way that we always get out of a position. If there's going to be some sort of bearish signal, so we get some sort of bearish candle, maybe 2 daily candles, 2 red daily candles, that says, okay, let's take profit here. If we come into a transition point, which almost everything's at all-time high, so we have to look for that signal I just said former, but there's definitely trades in which we have signals of transition points, like a trend line. We take profit. And the reason why we take profit on that, on this move here to here, we'll take profit on this move here, is so that if this price does come down, right, and technically a resistance it's supposed to, if this price comes down and we take profit right there, we can re-enter this trade if we need to capture more. But if the price in the market does come back down, we've already captured the profit. And that's where we're using our very simple rules. We don't get mad that we took profit on the trend line here if the price continues, because we can re-enter it. We have the ability to use confidence to get back into this trade and put money on it. But we know that risk reward, we took our profit here and we took it home. so that if something does and the market does turn, then we're already out of the positions and we don't have to worry about it. They all happen at different times. How do we avoid the growth trade? That's literally was it. We were in the growth trade. We took this trade over here. If you remember, we took the Apple trade here. We took the Apple trade here. How do we get out of this trade? Shit got wild. Our signals popped off and we got out of these trades and we never had to get back in. We were looking to get back in, sure. We were looking to get back in. This is when all the GME shit was happening. This whole thing like this. But we just follow our rules. We don't need to know what's going to happen afterwards. We just trade on what we see in front of us and we react every single day, right? We're here every single day. We react. And if we stay disciplined, if we get out of this trade because it hits off this resistance, we exit it. It can come down here for a month. We don't need to get back in. You don't get to choose when and where these things happen. But if we follow the rules here, then we'll protect ourselves on those longer terms, right? It's going to happen. It's going to happen. We're going to get another correction, and you're not going to make money for a couple weeks unless you short it. Make your money now. Make your money now. And if you're, this is again where we have the ability as short-term traders and trading speed and momentum here, that we get to capture all that point now, and we don't have to wait a year to get the same amount of points. We're taking the risk because we think we know more, and as long as we're making money, we must know more, right? If you do it consistently, right? You must have some sort of edge. And so it's, listen, man, we're all going to make money and lose money, but it's that consistency and keep doing that. That's who's actually profiting, right? Any idiot can make a ton of money today, but can they keep it tomorrow and the next day? And after that month of not being able to make money, are they going to be able to come back after the next month and make money, right? Think about it. Since we started this, technically I did this since a year ago here with most of you guys. We've had multiple times when the market will do this, and it's because of that time when the market was going down that we were actually able to make money in the first place. Because if it doesn't consolidate, it doesn't break out. And people don't bet. Everyone thinks the market's going to go up, like pre-COVID, all you can do is go long. All you can do is go long and your margins suck ass. It's when things are bad and volatile and things consolidate that we're looking and we're fucking praying. I don't mean praying as in God. I mean praying on others, boogeyman in the hell out of the option chain. We find when no one else is betting that there's going to be volatility, and we find that moment and then take it. So remember, during those bad times is when everyone feels bad. And it's during that time that we start to get fucking hungry. We start to look for those opportunities, and that's when we get paid. Because then we come out of this low, everyone thought growth sucked. Everyone thought it sucked. I thought it sucked. Facebook was terrible. And we took a Facebook trade leading us out of a shithole and made a ton of money here, right? That's, again, you want this to happen. This was months and months. I'm willing to sacrifice not making money for these amount of months here. Now, we did. But I'm willing to let that happen to make the money here. Because that's more money than you're going to make from a long-term investment, holding it through all this, right? And especially if you were the one buying here. So it changes, but the discipline definitely stays the same, right? Pretty open, yeah, it's pretty open-ended question, so I could throw a lot of things at. Ecto says, man, I haven't heard other voices in the pit in a minute. The pit of exchange is open outcry, guys. It's supposed to be the open outcry. If we could figure out what the damn button was, maybe I'll just put it on the normal one. We can figure out the button. Let people jump in here. But yeah, that's what I got for today, guys. Tomorrow's gonna be fun. Hey, listen, it's gonna be fun. If you haven't made trades, then, I mean, most people made trades, but you want to get more involved, then take a chance. Get involved tomorrow, right? Most people are not betting that the market's going to keep doing what it's doing. I'm betting that it's going to. Am I going to lose some of the trades? Absolutely. Absolutely. But I'm winning on a lot of them. So, again, don't let yourself get in the way, right? I don't know what the market's going to do either, but I can react to it pretty well. You guys can react to it pretty well, right? So, don't let sentiment in others, right, dictate what you're going to do. We're going to let price do it for us. Price starts to come down. we're going to get out of it in the same way. Just like over here, we had this trade here and we had to get out of the position, but we re-entered it, right? This could have gone to zero, but we already took our profit, right? So again, as long as we're making our trades in a short-term understanding and trying to profit on this move and then capture it on the next one, we're not going to get hurt on the long term. Price can go down for a long term all at once, but we've already exited. Remember that, because this could happen at any time. Just like tomorrow, you could have some volatility tomorrow and going into the weekend where you don't want to be in some of those trades and you want to take it home, right? If it happens, I'm taking the money. I'm going to take the money and have a great fucking weekend and come back next week hungry for some more, right? If it doesn't happen, it doesn't happen. But I know I made the money when I could make the money, right? Because you're going to have some balls to do it, but when it's there, right? It's not, and again, that's where shorting comes in. And I would say for you, Mozzie, and others that have been doing it for a while, and you got it, the ability to also short in the same way that we go long is one of the hardest things to do. This is one of the hardest things to do. This trade here, when we shorted this is one of the hardest things to do, is to be long on something like this here and make this money here. And a lot of us made a lot of the money here, and to go and short it from here, it's one of the hardest things to do, and it's a bias, and it's in human nature, we have a really hard time removing. It's like you're protecting your family, and then the next day you want to kill them. That's not how humans work. We're not going to do that. But that's almost what it's like for going long on something like Tesla here, and then shorting the shit out of it. And because there's a mental block to do that. There is literally a mental block to do it. You can't do it immediately. You can't go long one day, and I know everyone's tried it. We've all tried it, where you buy calls one day and then the next day you try to short it. You can't do that. It's over time. It's a consolidation, just like always. Breakout, consolidate. It's breakout or breakdown. It's not just breakout. It's breakout, consolidate, breakout or breakdown, and you trade it one way or the other after the consolidation, and that shorting will help. So when we get there, we'll get there, right? We're ready for any market. We don't care what we're buying. We don't care what we're selling. Doesn't matter. We're not hurting anybody. They're fucking derivatives. Market makers are making money on us anyway. So it's not. Sometimes we are stealing someone's lunch, but right now we're not, because there's no one else with lunch. Everyone's eating dinner. So no worries. I'll see you guys in the morning. It was a lot of fun today. Had a lot of fun. I think this morning we've obviously had a lot of alerts and shit, and the last few days, I would say tomorrow's no exception. There's gonna be a lot of weekend trades. So enjoy your night, your evening, and I'll see you in the morning.